please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
About 45 points higher on the Nifty, and that's 10,580 almost.
The valuation is better in bonds, but long term I don't think interest rates should be going up too much from here.
The quantum of loans which is unrecognized is probably getting smaller and smaller, and outstanding stock, if you look at the entire stock of bad loans, it is probably not more than about 3 to 4 percentage points for the entire industries.
Fraudulent and unauthorized transactions which have benefited a few select account holders without naming.
12-point change on the Nifty, 10,551 is where we are at.
Today was not just about banks. In the last hour, we spoke about banks a lot, but others also sort of caved in towards the end. You spoke about some of the NBFCs, for example, from the high points.
Sharp sell-off in the last hour of trade on Dalal Street. The Nifty, however, manages to hold on to 10,500. The Sensex ends above 34,100. Mid-caps stay resilient.
Banks are the weakest link in today's trading action. Bank Nifty falls 1.4%. Public sector banks are the culprit. The index ends over 5% in the red.
PNB ends the day close to 10% in the red after the bank detects a fraudulent and unauthorized transaction of nearly 11,000 crore rupees in the Mumbai branch.
NBFC stocks, rally. They rise on expectations of lesser competition from PSU banks after the announcement of new NPA rules by the RBI.
MSCI February's review adds to the weightage of Reliance Industries and Bharti Airtel and Petronet LNG, pushing up those stocks in trade. Meanwhile, Bharti Infratel slips around 3% after its weightage is cut by 35 basis points. Those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talk Back, the show where we tell you about all the 8 hours of hectic trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. And over the next 30 minutes or so, we will discuss the top 5 headlines. As you said, our experts will answer your questions. Joining us to answer those questions are Geojit Financial's Gaurang Shah and our technical expert, Ashwini Gujral. Gentlemen, thanks very much for being with us here. Good evening. We'll just come to you in a bit. Let's quickly wrap up the market as we always do. I mean, as they say, markets take action and then, kind of sort of reasons follow. I don't know if it was in reverse today, but it was an interesting day. A day of 2 halves, actually.
Exactly. We weren't prepared for this kind of a fall. It did look like we may underperform slightly because of the Reserve Bank rules, which will force banks to recognize NPAs faster and therefore push up the provisioning. Everybody will have to rework next year's book value and EPS was the expectation. So the new rules were always expected to take the PSU banks, in fact, even the corporate-facing banks, Axis, ICICI, Yes Bank, lower. But around noon, the size of the fraud at PNB, quite unconnected to the NPA rules and other system hygiene, the fraud itself took a body of its own and seemed to have hurt sentiment. I'm still not able to connect. It is only a fraud related to that bank, and whether that was alone responsible for the way in which mid-caps fell across the board, and even frontliners towards the last hour of trade. Probably the market was jittery anyway, and this was only the last fagot. But what did you make of the nature of the stocks that fell?
It's all banks, Lata. One way or the other, up or down, all about banks and financials. So very quickly, you look at the Nifty PSU bank index, 5% fall. You look at the private bank index and you look at the bank Nifty. Those are the 3 indices which basically tell you the story of the day, and all ended deep in the red. Just want to take a very quick look at specific stocks, and these are the top losers in the PSU pack. PNB, of course, OBC, Allahabad Bank. Then you come to something like a Bank of India, Canara Bank, Union Bank. Again, all between 5 and 8% dot cuts. Private banks were not immune to the carnage in the PSU bank space. So Yes Bank was lower, Axis Bank was down, ICICI Bank was down heavily today as well. NBFCs like Canfin Homes, Dewan Housing, Indiabulls Housing, essentially, and especially there were stocks like Edelweiss which were up 5% as well. But these are just a bunch of housing finance NBFCs which did well. Broader gains in Arcom, there was Nagarjuna Construction, which reported good set of numbers. Margins have expanded. Sonata Software, we spoke with the management mid-afternoon. Stock ended up about 15%, basically doubled gains since the time of the interview. Then you had Action Construction, ACE, something like a Nelco, GSK Consumer, which ended higher as well. So, I mean, I think as we said earlier, for the mid-cap part of the market, it wasn't as terrible as it was for the large caps, especially the financial space. Lata.
Fair point. Actually, let me take this to the experts. Ashwini, what's your sense of the way in which the market behaved? Should we just zero in on this fraud hitting sentiment, or was market sentiment anyway very vulnerable?
See, Lata, fraud in the market has many, connotations. What is a stock? It's an act of faith when you put money, trusting financial statements coming out from a company. Now, fraud means whatever you believed was false, and hence maybe even more frauds could be there, because a bank cannot transact with itself. Tomorrow, investigation, how it happens in India, every second day there is a leak. So the moment there is a leak, you will have a collapse again. And because of that, no confident buyer will come into PSU banks or banking in general till this matter is over, because these things tend to linger on.
Okay.
RBI rules came, okay, we know the rules, you price it in an hour and you move on. Fraud means there'll be more layers, more arrests, more skeletons out of the cupboard. So that is the real bad news which happened. Okay. RBI rules the market could have taken, but I believe now you are hardly 6% from the pre-recap day high on the PSU bank index. So that entire rally is on the verge of getting given up. I believe possibly the Bank Nifty has restarted its down move, and if the Bank Nifty has started, it's only a matter of time. The Nifty gets on the bandwagon, and this could happen quite independently of the global markets going up or down, because we could start to underperform. Nobody would like to touch a market where the second largest government bank is embroiled in all sorts of investigations, fraud, and all of those things. Anyway, people are not bullish there, but it tends to put a shadow on the rest of the market also.
Okay. So contours for now in terms of trading, is it largely a short trade?
See, Bank Nifty people should have taken shorts home, because now all rallies will start to get sold into, and the low of the other day, which was about 25,050, that should get tested fairly soon. So chances are that Bank Nifty leads the Nifty also lower. Nifty is still a bit away from the 10,300 zone, but the way market shaped up by the end, I think a fraud-ridden market, a leaky market where all kinds of news is leaking out, that often is a bearish market.
Okay, that's sounding a little scary, because it is uncertain how far and how wide it can stretch and how long the uncertainty can continue. Let's take the second headline of the day. Banks were the weakest link in today's trade. We've said that before. The Nifty Bank fell 1.4%. Public sector banks were the culprit, ending over 5% in the red. Let me just take this opportunity to quickly tell you what were these RBI rules that roiled the banks in the earlier part of the day, before, of course, the PNB fraud news came along. Basically, the rules say that until now you had schemes like called the strategic debt restructuring, which could be used to solve a defaulter, give him more loans and somehow restructure the loan. Now those schemes go away, and banks will have to either resolve it, all of them agreeing to some kind of a package, or simply take all the large loans, 2,000 crore plus loans, to the NCLT. There are other hygiene measures also that the Reserve Bank has announced in terms of when you will upgrade a loan, when you will report the first default to the Reserve Bank's database. All these very good, excellent international rules, but it will simply mean at the moment more provisioning for the banks, more recognition, faster recognition from stress to NPA, and that brought the not just the PSU banks, that is something that will affect all corporate-facing banks. So Axis, ICICI, and yes, will also be in this category. Well, with that,
we have a question. Yes, so we have Aditya Babu, who's tweeted a question to us. His question is with regards to Dena Bank. He's got 10,000 shares of Dena Bank, bought at 48 rupees. I think price today was about 23 or so. He wants the view for Dena Bank from a 1 to 2 year perspective, whether he should hold or sell. So let's just take this very quickly to Ashwini. Ashwini?
And good luck. Your price is never going to come, and possibly you'll see much lower levels, because where is it easier to do a fraud, Dena or PNB? So, if PNB is in this kind of mess, maybe others are also. But anyway, it was in a downtrend, never really went up, even when the recap news came in. So I think you have to exit and move on, possibly get into a private sector bank or an NBFC where the rally has just started. So while the banks are in trouble, NBFCs could benefit from this.
Yeah, we are going to discuss NBFCs in the next headline. But for the moment, there are more questions on public sector banks. Sunil Deshmukh has sent us a question on Bank of India. He says he has 300 shares of the company bought at 410 rupees 6 years ago. No, you should be monitoring your shares, Sunil. He's a long-term investor, he says, and wants to know if he should continue holding or sell out now. Do you cover this bank, Gaurang?
Good evening, Lata, and good evening to all of you all. Yes, the sad part is we do cover, but the recommendation is on the sell/reduce side. And the problem, Lata, is that investors should not sit down nursing stocks which have actually destroyed your capital to this extent. And the numbers are all out in the public domain. And I think over the last 6 years, this gentleman would have definitely heard some voices of concern with respect to the earnings. And I think the bank came out with the numbers last week, if I'm not mistaken. And today you had Allahabad Bank and Dena Bank reporting numbers which are a sure set of disaster, according to me. So no point nursing stocks for 6 years. I think you were better off buying Nifty or definitely switching it over to maybe private sector bank, NBFCs, or even, as a matter of fact, consumption-driven stocks, which we believe would definitely be positive over a longer period of time. Need to take remedial action. Don't wait for your capital to get eroded to this extent.
All right. So that is...
Cut your losses. You can't do much.
Cut your losses. Keep a hard stop and get out if you lose more than that. The third headline today is essentially PNB. Punjab National Bank ended the day down around 10% after the bank detected a fraudulent and unauthorized transaction of over 11,000 crore rupees in a Mumbai branch. CBI sources said that it has received 2 complaints from PNB with respect to designer Nirav Modi and a suspicious transaction of 10,000 crores. Let's just put this in perspective, what we know so far and where this might actually head from here. Ritu is here with the details. Ritu, over to you.
Well, Punjab National Bank today, for starters, issued a statement to the exchanges saying it has detected fraudulent and unauthorized transactions in a Mumbai branch which benefited a few select account holders without naming them. It also said other banks have advanced money to these customers abroad based on these transactions, amounting to a total sum of $1,771 million. Punjab National Bank further said that the matter has already been referred to law enforcement agencies who are taking action in the matter. Now, if you recall, there was a very similar but separate case filed earlier where a CBI FIR was filed on the 31st of January, naming Nirav Modi, his brother, wife Ami Modi, and Mehul Choksi of Gitanjali Gems for colluding with 2 Punjab National Bank officials to defraud the bank of 280 crore rupees. Now, sources we spoke to indicate that these 2 cases may be linked. In fact, sources in the banking industry say the quantum of fraudulent transactions could well be over 13,000 crore rupees, and that several Indian banks through their overseas branches have given credit to Nirav Modi and his company against letters of undertakings issued by Punjab National Bank. The Indian banks that have discounted against these LOUs include names of Union Bank of India, Allahabad Bank and Axis Bank, among others. Now, sources say that this scam has been ongoing since 2011, and it's only now that it was uncovered. The case, of course, is still unfolding, and it remains to be seen what the extent of the rot really is. But as far as the other banks are concerned, PNB has to honor the credit that they have extended to Nirav Modi and other officials against the LOUs issued by PNB. So the money is not really lost. But for PNB, that has to meet these obligations as a guarantor for Nirav Modi and his other officials, the hit could well be very big.
Oh, yes. Thank you very much for that, Ritu. We have to see where this stops and how much can be recovered even from the borrower. well,
I mean, if the money is in the banks, maybe the accounts can be frozen and that can be used. But I mean,
but there won't be much. I mean, my sense is that some assets created on the ground can be
but it's always harder to do that, right? I mean,
it's pretty hard to do that. And there have been such jewelry frauds in the past where people have made off without leaving a rack behind. Okay, let's get some questions on the issue. Twitter user Pallavi Jha has bought 300 shares of PNB at 172 rupees, wants to know if she should hold or sell the stock. Ashwini, what's the advice?
See, my sense is that today is the start of something, and where these guys could lose another third of their value. So maybe PNB will soon be found at 125, 130. And, it's almost gotten very close to the pre-recap level. So I don't see too much hope. If you do get a rally somehow, you need to exit. See, just a blanket rule, whatever you buy, if you start losing more than 10%, that is the end of it. If you follow that, I think you will keep out of trouble, because PNB fell 10% much before this news was out. So that way, keep your stops and you'll be safe at least.
Oh, yes. So, Pallavi Jha, don't just wait for good times to return. There is an opportunity cost for the money, and it's better to cut losses. That's the advice. We take a break on that note. When we come back, our experts will be with us to answer all your questions, and we have more news from the markets. Stay tuned.
Welcome back. You're with us here on Markets Today Talk Back. Gaurang Shah and Ashwini Gujral have been answering your questions. Today was a bad day, especially the second half. PSU banks fell and it took the rest of the market with it down. Let's dive straight into the fourth headline of the day then. We told you how banks were under pressure following RBI's new NPA framework. However, NBFCs were in the green today, rising on expectations of lesser competition from PSU banks. Let's listen in to what Manish Gundwani of Reliance Mutual Fund, who we spoke with earlier in the day, had to say about the threat from PSU banks to NBFCs being delayed a little bit. Listen in.
When they did the recap, clearly there was a lot of capital which was seen as growth capital, which would spark aggression by some of the PSU banks in terms of lending, and that could probably have been a negative. At this point, I guess it's fair to say that negative's been pushed back a bit right now.
Okay, well, actually, Ashwini explained as much that the bank's loss has been the NBFC's gain, lesser competition from PSU banks, and there seems to be a feeling that at least for the next couple of months, we will not see too much of a spike in yields. What with even crude kind of being quieter. Let's get questions going then, since Ashwini already discussed it as a theme. Pramila Biswas has written to us. She has 200 shares of Bajaj Finserv, which she bought at 5,500 rupees. Okay, so I think that's before some kind of a
about 51.75 now.
Yeah, but clearly if she bought it at 5,500, it has gone through some stock split. That's why it should be, otherwise it doesn't make sense, 5,500, and now the stock is 1669. She wants to know if she should hold.
No, that's Bajaj Finance, Lata. But this is Bajaj Finserv. Bajaj Finserv is at about 51.75.
I'm sorry. I was looking at Bajaj Finance. Okay, do you like this stock, Gaurang? What will you tell her? Bajaj Finserv.
Well, I can comment on the earnings, Lata. Unfortunately, don't have a specific coverage on Bajaj Finserv, so won't be able to comment on it. But, well, over the last couple of quarters and years, the company has been reporting great set of numbers. And the theme that drive forwards the earnings is basically the capability of the company to, penetrate into the semi-urban and rural market. And I guess that's where there's been encouraging sign. Unfortunately, I can't comment on buy, sell and hold because we don't have a coverage.
Ashwini, would you want to give her some advice?
Well, about PSU banks, you don't need enemies when you are a PSU bank. So that way, I think NBFCs never had any problem.
Okay.
But, it's still above its 200-day moving average, hardly, $200 from its purchase price. So keep a 4,900 type of a stop, although that looks wide, but it's a 10% stop. Whenever NBFC rally restarts, I think you'll be able to cross not only 5,700, but go higher right up to 62, 6,300, and that point may be coming.
Okay, and now with that we come to the final headline of the day. MSCI's February review added to the weightage of Reliance Industries, Bharti Airtel and Petronet LNG, pushing these stocks higher in trade. Meanwhile, Bharti Infratel slipped around 3% after its weight was cut by 35 basis points.
Okay, this is an SMS we have from a viewer. Rishi Chabria, I think, has written to us with a question. He wants to know about Reliance. He wants to buy 100 shares of the company, has been wanting to do that for a long time, wants to know the right time. Well, if there's time, I'll try to come to both of you, but Gaurang wants to buy 100 shares of Reliance. What's a good time?
Well, I'm a miserable performer, Lata, when it comes to timing. But on the fundamentals, well, we've been recommending Reliance Industries as an investment idea for a very long time. And we're quite excited by the diversified play now that Reliance Industry has, including the new kid on the block, Reliance Jio, which has contributed to more than expected numbers that analysts like me had in mind. And of course, there are other businesses doing fairly well. So yes, definitely, I would say go and take the plunge. Timing is something that I can't comment.
Fair point, but then let's ask the technical expert exactly that. Ashwini, off its 1,000 plus levels, but has bounced back from the sub 900 levels as well. Good time to buy?
See, I'll tell him the problem he will get into. The right time was to buy at 570 when Reliance broke out of an 8-year range, and from there it doubled. Now, if you expect Reliance will again double, I think you are asking for too much. The problem now he will have is that it will become range bound, and possibly the range will be, say, 870 on the downside, 1,000 on the upside. If he wants to buy something which is corrected quite well and is now moving up, I think a re-entry into NBFC stocks which are down 15 to 20% may be a better idea, because Reliance could have a sideways year after doubling last year. The odds of it doubling or even going up 50% are kind of low this year.
Okay. Well, that's the advice. Both experts say it's a good buy, but yes, you've missed the bus kind of, and so you'll have to wait that while longer. Ashwini and Gaurang, thank you very much for joining in and answering the questions of our viewers. With that, we wind up Markets Today Talk Back. Thanks for watching.